All right, how was lunch? Good? Vegetarian, non-vegetarian? How many people are vegetarian? Wow. And non-vegetarian? Both hands up. Great. All right. So back with again, I have powerful people there because lunch is done. So now we are starting with the kick sessions again. On the stage of Equalify, Enkinfect presents Indian Fund Admin Innovation Summit 2023. Now we have back another session of fund administrator role in meeting asset manager, investor, and distributor expectations from very amazing personalities. To be coming up on the stage, Ajay Vaswani, President and Chief Business Officer, Alternate Investment Funds, the Investment Trust of India Limited. Another one would be Manoj Shenoy, MD and CEO, O3 Wealth and Asset Management. Then we have Nandan Deole, Director and COO, Lighthouse, Canton, India. And last but not the least, Vaibhav Porwal, co-founder, Dezerv. Everyone, a big round of applause for them. This side did not go for lunch? Can we? Thank you. Over to you, gentlemen. Thank you so much.
Thank you very much, guys. I'll try to make sure that I'm able to keep you guys awake. I'm sure I'll not have to put a lot of effort because the kind of diverse panel which I have with me today is going to actually add a lot of value to you guys. And whoever is into the fund administration business here, I would advise, abhi se hi pen nikal lo and start taking notes. Because the people who you are seeing here, one is from the wealth management industry and the asset management space. Manoj, with such a vast experience into the wealth management space, with IFL earlier and now with O3, can give you a perspective on the wealth management side and also the asset management side related to the IF business. Look at Vaibhav. Vaibhav will add value to you with the perspective of the digital side of the wealth part of the business, how the fund administration can support the digital piece. And then you look at Nandan, the person who is a COO of a company which is actually having the asset management business not only in India but also offshore, Lighthouse. I think you will have to do a lot of effort to go ahead and meet him and fix appointment with him. Today at least you have an opportunity to ask questions and take a lot of inputs from his knowledge. So I'm looking forward to this discussion. I'm very excited about it. As far as I'm concerned, I look after the alternate investment business for Investment Trust of India. I believe in India, alternate investment business is actually at the tip of the iceberg. We have just yet started. There is huge ground to cover. Even if I only look at the Cat 3 opportunity here in India, in US only, a Cat 3, if I am not wrong, it is around $4 trillion industry, hedge fund. In India, if I put all the AUM together, it will not be more than $3 to $4 billion. Even if I am saying $3 to $4 billion, I am aggressive in the number. So there is huge opportunity for alternates business to scale in India, not only Indian money but also offshore money. And let me tell you, there are in every business there is one department which is not visible in the front, but it is the backbone of that business growth. And here in this business, in the asset management space, it is fund administration. So this was the reason we thought we'll come together today, and the objective of this particular panel discussion would be to figure out the objectives and expectations from fund administrators from the side of asset managers and the wealth managers. So I'll start with you, Manoj. It will be good for the audience if you would give your insights on the IF industry and what is the current state and the growth prospects.
Yeah, I think you have thought of even the brief in terms of the prospects, but let me start from where it all began. I think the regulators opened this segment up in December 2012, and then it was a slow journey. I think the first few funds that got launched immediately after the AFs came was mostly the long short funds. And I still remember very well, it was Ambit when Andrew Holland, I've done several meetings with him, and people were wondering how it works and stuff like that. So it's a differentiated product through a AF. So AF is mostly used as a platform to get differentiated products, which you can't do in a mutual fund or a PMS. So it started off like that. But the thrust for the AF industry actually started in 2017. And there I must tell you, the pioneers were the organization where we both used to work earlier. I used to head the AMC business on the manufacturing side. He was on the sales side that time, on the wealth side. So it all started as the late stage private equity funds, and then came the early stage, mid stage, and all that, which otherwise could not have been done. So you'll be surprised. So effectively, I would say that the industry began in 2017, effectively. Between 2017 to 2022 March, that is, okay, this year end figures I don't have, current figures, but at least 6 months back, we are at about close to 7 lakh crores of committed corpus for the AF, and invested is about 4 lakh crores. So that's a huge quantum. Where mutual funds is about little less than 40 lakh crores currently. It's same. It's been same for the last full year because of the volatility. And the PMS industry, though it has started much earlier, is around 4 lakh crores. Now, the growth in the last 5 years, mutual funds have grown at, those AMCs have grown at about 16 or 17% CAGR for the 5 years. PMSs have grown at about 16 to 17 or 18%. However, because of a lower base, AFs grew at about 50%. Now, the projections, coming to your question, this is purely from the AMFI projections, what I have taken the data. For the next 5 years, that is from 2022 to 2027, the expectation for the mutual fund industry is to grow at about 18 or 19%. For the PMS is also almost similar at 17 or 18%. However, for the AF, they are still expecting it to grow not at 50% CAGR, but at least at about 30% CAGR. So that's the potential. And today, anything and everything can be done within the AF. So the growth is going to be coming from AFs. The investor in the past used to be mostly institutional, but now after people like IFL, Kotak, Edelweiss, and others, now HNIs have access, and they are the ones who pioneered HNI investing into this particular segment. So from a overall perspective, I think AFs will grow, at least at about 30% over the next 5 years, which should translate to about 26, 27 lakh crores from where we are today at 6 or 7 lakh crores, and mutual funds will be about 92 or 93 lakh crores. So that's the overall on the industry.
Yeah, and I totally agree. There is huge scope of growth, and what I have always said on such panels is that if AIF industry has to grow in our country, there are 3 things which are important. First is the awareness, second is the visibility, and third is knowledge. I really appreciate Equalifi. On such platforms, they are able to do all these 3 together. So I really appreciate the initiatives which they are taking to promote these, at least alternate investment industry. Nandan, my next question would be to you. What, as per your view is concerned, the fund administrator can add value while setting up a new AIF?
Yeah, sure. See, coming from the background of the wealth and asset management, what are the things are expected from the fund admin? Okay. The one first thing which I would prefer to have from a fund admin is a robust system, which starts from the onboarding of a client till the business MISs. Okay. So that currently most of the IMs are managing half of the things internally. So that is one. Second thing, as Vikram also mentioned, the taxation, basic taxation related stuff, where filing of the returns or the basic when there is a distribution, how the tax would be computed. So all these services can be provided by fund admin. Currently, most of the IM, or at least we are struggling, we go to 3-4 different people for the services. So one is that. Secondly, digitalization, and if we are able to provide do-it-yourself portal to the distributors or and the investors, okay, that would be the great. I think that's the bare minimum thing which I think if the fund administrator provides, there is a lot of help to the IMs.
So this clearly shows that there's a lot of innovation
Yes.
and scale up is required as far as the fund administrators are concerned. So Vaibhav, my third question goes to you. How crucial is the role of fund administrators for the startup into the wealth management space?
So extremely crucial, and Manoj covered the growth of the industry very lucidly. I'll add 3-4 large trends which are being witnessed by us. So first and foremost, a lot of new investors are coming in the market, and they are demanding a completely different set of products. Complexity of products is increasing, and that's why AIFs exist. Third thing that we are witnessing is there's constant demand for lower expenses. So obviously all of us need to work on optimization of that. And fourth is regulatory oversight is increasing, and that's where we need a lot of support from fund administrators. Now coming to startups, if we look at India, most of the tech-enabled wealth and asset management startups have focused on slightly unique and differentiated product offerings. Unlike conventional wealth managers, they have adopted a slightly different approach. So products like Angel AI, products like structured credit funds, products like direct-to-consumer passive AMC products, these products have become extremely popular. But unfortunately, we don't have the resources or expertise to manage some of the administrative issues. And since we started our company about a couple of years back, I can proudly say that we got a lot of assistance from all the administrators, right from the stage of setting up our platform to hand-holding us through the process of accounting, compliance, regulatory reporting. So we got a lot of support from that. And it allows us to focus on one thing which is important in our mind, which is portfolio management. And in my mind, for startups, especially if we are dwelling in complex products, you'll need a lot of support from fund administrators.
Perfect. I'm hoping fund administrators are taking notes. Manoj, there are various kind of investors, the family offices, HNI investors, corporates. Needs of all would be different. They would expect different kind of service delivery. Can you throw some light on what kind of different expectations these different investors have, and also can add if in any way fund administrations need to adjust to those needs?
Absolutely. I think it's a very, very critical thing which I learned in my previous assignment. You have institutional investors which typically invest in a private equity fund or the likes of Sequoias and all that, where the LPs are hardly 15, 20, across all the funds put together, they may have some 30 LPs. So what happens is when there is a meeting with the LP, which is a review on a monthly basis across the fund, everybody is sitting there. So right from the fund management team to the operations team to everybody is sitting, and then they are able to trash out anything that is there with the institutional investor, and that's their expectation. Now that is on the institutional side, where the whole organization is behind that to satisfy the client's needs. Now you move, post 2017, lot of HNIs, ultra HNIs, and family offices have also come in. Now, while earlier they used to have, say, about 20, 30 LPs, now suddenly for every fund which is floated, at least in the funds what I saw in my previous organization, minimum you can have, maximum you can have 1,000, and we would have 1,000 in every fund. Now, you can't have the entire team, the COO, CEO, CIO, risk guy, everybody sitting and talking to each one of them. Somebody is given 1 crore, somebody is given 5 crore, somebody is given. So their needs are, you can't be as intense as how you treat an institutional client, but at the same time, the expectation from these clients are similar to what the institutional clients will want. Just to give an example, year-end report. I have seen reports going, and then we recall again sending, again, because for each time for a different reason. One is, okay, tax calculations have not happened properly. Valuations have to come from the fund management team. It's not as simple as, if it is a unlisted segment. If it is a listed, it is easy. There is no much complication, but alternates, so mostly it is these kind of stuff. So there, I think I fully agree with Nandan when he said that, we normally tend to deal with 3 or 4 people. For something with Deutsche Bank, something with some auditor is certifying, valuation comes from the fund management team, that has to be, sort of signed off by one of the auditors and stuff like that. So there, I think digitization from the fund management, fund administrators, and then integrating everything. Most of the mistakes what I have seen when, to manage this HNI, ultra HNI segment, the mistake is because of, doing things manually. And then there is some mistake, and then you have to rework on the whole thing. So from their requirement is same as the institutional, but you can't go and speak to each of the client individually. So you have to have everything on a digital platform, error-free, digitize everything, and then give it to them, then you have no problem. Otherwise, if you have 10 funds and 10,000 investors, minimum per quarter, at least 5 to 10 complaints will go to the regulator. That, I got this wrong or I got this right. Then apart from this, they also, unlike the institutional investor, where when there is a drawdown, you just pick up the phone, speak, and the money comes. Here, 10,000 people, drawdowns are there, and then the payouts are happening, tax calculations are happening, and so the intensity for the HNI, ultra HNI is far, far, far greater than what you do for institutional investors, and that is where the fund administration team has to really, really, really gear up if they want to build a really strong, I would not say retail, but the HNI, ultra HNI business.
So one thing is coming up again and again, that all services should be there under one platform. That is actually an ideal dream for all asset managers. Today, even when we look at setting up our fund, maybe in Gift City, an offshore fund, I need to have a consultant separate. Yeah. I need to have a fund accountant separate. So everything if can come under the one. Somebody is working on my PPM, somebody is working on something else. Everything should be there under one umbrella. That will give larger scale, because then you can outsource all your activity to one person. So Vaibhav, what are your views on this, that how can the fund administrator help in improving or bettering the investor communication?
So investor communication, as Manoj touched upon that, that's been the Achilles heel for all of us for the longest time. And especially being in sales, I faced it enough number of times. See, I think two things which are playing on, and I'll cover my point in the context of digital businesses. A lot of new investors are coming into our funds who are investing for the first time. And second thing is most of the digital platforms are not human intensive, right? So we don't have large sales force, we don't have large sales support teams which can support query resolution. So therefore, it's essential that quality of communication is so simplified that users find it very intuitive. What we have experienced in the past is, and much of it is attributable to the fact that there are multiple sources of information. If we can put together one single source of information through one single channel, then users will be able to consume that information much more seamlessly. And that is where the biggest gap is coming. I think as we move along, we need to find that solution. And I've seen that happening with mutual funds. The moment we started introducing single source of information from CAMS callback or through NSDL callback, users' confidence in the system increased multifold. And communication is all about utility of the user, right? So that's how I would see it.
That's perfect. Nandana, my next question goes to you. There are fund administrators which are Indian, and also there are fund administrators which are global. What are your views on this, that how can the Indian fund administrators can compete with the global ones?
I will touch base again on the same point, like what are the fund administrator in Singapore, as he has mentioned, and fund administrator in India. I felt when I was talking in setting about the fund, they are shying away from banking operations, they are shying away from the customer servicing. Okay, they say I don't want to do it. But that's a crux where the IM spends a lot of time and it goes. Now to onboard a one investor, it takes 3 to 4 days, okay, at least bare minimum. If it is made digital, and we as a small startups or mid-sized fund can't invest into that technologies for everything and then again integrate it, manage that, is very difficult. So one of the challenge which I feel is that these fund administrators or global have a robust system, they have a set in processes, okay, and they are very clear in what are the things can be done or cannot be done. So if that things as a challenge, if the Indian fund administrator takes on, okay, that would be the great. So that is one of the biggest thing. Second thing is what I felt is on the compliance point of view. There are compliances. If the fund administrator takes some burden of the IM, okay, and makes the reportings like DI reporting, INVI reportings, okay, or your quarterly, most of them do the quarterly SEBI reporting, but INVI and RBI, they are shying away from doing it, okay, and DI reporting takes a lot of time in the RBIs. So some of the part, and as they will be able to take on this challenge and would be able to compete with the global guys. And secondly, if they are cost competitive enough, then that would be the great thing.
You rightly said, for INVI reporting, and then you go ahead and hire another tax consultant, he does that. So that's really a pain which can be solved. There is huge scope of improvement. I'll have many questions with to ask this panel. I know that we have limited time we will to spend with these panelists today. I would encourage you guys, if you have any questions, to ask, and then I'll add a couple of more questions which I have in my mind. So why can't we just, because I am sure people in this room will have a lot of questions in their mind. Till the time the mic takes its places, Nandan, can you also put your views on how the scale can be managed and can be assisted by the fund administrators?
See, I have dealt with a couple of them in Singapore, and I have dealt with in India. The first of it, the scale is that there is a Hemal has like to mention, there is a lot of talent pool in India, but motivation for them, a big picture for them, and retaining them is a Herculean task. Even when we operate from Bangalore, hiring is one of the biggest challenge for us. So scaling of operation has a hurdles, but yes, there is a lot of talent pool, and we need to channelize that talent pool. Like you can hire for accounting, you can hire, or the taxation, you can hire a chartered accountant, freshers. At least they will do the basic of the taxation part, and then the advisory can go to the big fours, okay, while setting up of the funds or all that. Second thing is that the challenge is understanding and executing this complex product. The AIF is very complex product, though it looks very simplistic, okay, but as Manoj mentioned, getting valuations done, calculation of NAV, compensatory contributions, carry distribution, distribution of profits, it takes a lot of time and adjustments, and then calculate the NAV. It's tough. So robustness, giving information on time, and then I am giving the execution orders. That's where the scaling is required, and there has to be a it may not be like a mutual fund extensive volumes, but it is a skilled work at this moment. It will come, standardization will happen in over a period of time. In AIF also, the way mutual fund has standardized the processes, over a period of time AIF will also happen. But current challenge of scaling up is that we need a right type of a people. And basically training on this all sort of activities is core.
Yeah. So all proper pain points you are able to hear from the head of operations today.
Yeah, I have a question for the panel. So, we are seeing increased interest from foreign investors, and there is a gift city which is coming up. What kind of challenges do you think the industry faces in, meeting the expectations? I mean, which is the basic subject in meeting the expectations of foreign investors. As you said, there is I mean, we've been at fundraising for our fund. There is a large gap between what foreign investors expect and what our systems and our funds are geared up to handle. So how do you see this going forward?
Anyone wants to take this question?
It's a good question. In fact, I've gone through this myself with a couple of due diligences done by some of the foreign institutional investors. Now, there is no rule book how you have to go about the whole thing. That's what I realized. So how it works is it's like this. Now you have some sovereign fund coming out of Middle East. They look at mostly how the fund manager is performing, how the returns are coming, is he doing better than the, the benchmarks, etc., etc. So that is where, so their due diligence is more on the fund side, how is he selecting, how is his research, blah, 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 so all that. Now, same thing, you go to some of the endowments from US or some of the pensions from Canada. This is the last thing they will look at. If they are not convinced about that, they don't even come to you to invest. So what they look at is, are you fully compliant? Is your system geared enough? How is your risk management protocols? So how you are managing the risk on a real time? Then, so those kind of things. So they will not tolerate even a small, breach on this side. Whereas even if your returns are not slightly lower than the benchmark, they are still okay. And there are some funds who will come, they come only, they will look at that ESG and others. So every single foreign institutional investor coming in looks at things differently. But ultimately they come because there is a opportunity in India. So as long as India is throwing them opportunity, and the differential return compared to the rest of the world, I think the money will keep coming in. The only thing I want to again reiterate is that there is a lot of emphasis from these guys, thanks to these guys, on regulatory compliance. There is zero tolerance for any kind of a breach on these regulatory compliance. So that is something which a smallest mistake you do, as fast as the money can come in, it can go back as fast as it came in. $500 million can come in one shot. You can feel happy, but it will go in one shot. You make one mistake in on the regulatory side or a compliance side or a reporting side or something, then the money goes off. So I think that's broadly it is.
Perfect, bang on. So there are different asset classes, different markets, private markets, public markets, debt, real estate. Under the different AIFs, what kind of challenges and opportunities for fund administrators you look at?
So as I said in the beginning, sorry, I'm taking that question from
No,
you.
go ahead.
So, okay. As I said in the beginning, see, if it is listed equities, you get data straight away. There is no problem. Now, if it is anything other than listed equities, you didn't mention on real estate. So how do you do the valuation? So who will authenticate whether that valuation is right? So all that, those are the challenges here. And then if it is fixed income, how do you, it's a high yield debt, funds and stuff like that, or private equity. So then they have to, the dependencies on the investment team. But obviously, as per the regulatory guidelines, it has to be certified by a auditor, and then it has to be, then only it gets incorporated. That's why most of you would have realized mutual fund NAVs get updated next day. PMS's monthly reports come within 3-4 working days after the last day. AIFs normally come, okay. So it takes a long time. So that's the reason. It's not because the administrators are this one, but there is a lot of things that they need to get from various sources. That's what all of us have been telling, that everything should be from one end if the things are available. Then even like a PMS, within 3-4 days, things can happen and the statements can get rolled out.
It's perfect. Vaibhav, as the regulations are getting so stringent, how can the fund administrators gear up to support in that environment?
Oh, great. All my friends from the compliance team have great trepidation on Friday evenings because a lot of new regulations keep coming up on Friday evenings. See, with the increase in the complexity of products, regulators are bound to step in and make sure that investors' interests are protected. Now, in our business, all kind of compliance, information sharing, and transparency is coming to the forefront. And in that environment, for us to be able to manage all the compliance-related activities and keep pace with that is very, very difficult. And as Nandan mentioned, at some level, fund administrators need to broad-base their offering to cover some of these compliance requirements which are there. Along with that, one interesting thing which I was thinking about is fund administrators can possibly create a feedback loop between investors, asset managers, and regulators to create both investor as well as industry-friendly regulations, because they have the bird's eye view of everything which is happening in the industry. So these are the 2 points that I would think about.
And the new word which we are hearing today, which no one can ignore, is digitization.
Absolutely.
How do you think fund administrators can help us in moving business, maybe digitizing the business?
Absolutely, and this has been the big pain point. No single source of truth is there for us, both at the back end as well as at the front end for the users. We don't have any single source of truth. We are assimilating information from multiple sources and creating one single data base, and which is error prone, and which Manoj also touched upon, that you end up sending reports which are not free of errors. And also I think Gen Z, they want to have asynchronous access to information. and they would want to have access to information at their convenience and their time. So unless we are able to digitize our processes, it's very difficult. Now the unfortunate part is most of our current platforms are built on legacy infra. So that transition needs to take place before we are able to provide integrated solution.
Yeah, because Gen Next wants to live in real-time basis. They want to know everything on the click of a button.
To add from what Vaibhav said, is that I think the most important thing is how do we standardize the reports?
Yeah.
You know, each one sends reports in a different format, and then client wants in a different format. And then again, there is a challenge on the back end. So I think it's, as the industry evolves, I think that will also happen. So the standardization of reports, how it will be read, and how this one. So I think like mutual fund, nobody complains today. So they get that, you know. So something similar will happen at some point of time, and that's where the fund administrators need to get up, and then get to that point.
Nandan, your views on digitization?
Okay. From a fund administrator point of view, what can be done best is that do it yourself. Now, people generally say do it yourself for the customers or the investor, but I will say it is for the IM team also. Because if there is a valuation update to be sent to the fund administrator, I just upload into the portal and everything start getting processes. Okay. Similarly, if there is a query, the client writes it for the statement or basic, then it can go automatically through a chatbot or through a WhatsApp integration. It can be sent the statements automatically to the investor. Something where the manpower requirement and the human capital is reduced at the fund administrator point of view, as well as the cost effectiveness will come to the IM side. So something like a do-it-yourself portals will help a lot. Where if as a IM or as a on the behalf of the fund, I have to give some information, I just keep on uploading into their portal and they just start consuming it. And that will make the process faster. And since there are lesser number of handshake happening, there is a possibility of error reduction at the massive stage. So that is something which on the digitization can be worked out.
So digitization actually in the new era of scale, digitization will have to support, and that comes from the fund administrators. So if I keep talking, I can talk to this panel for 2 hours, but because of paucity of time, one question anyone can ask.
Hi, good afternoon everybody. My question is that we've been talking about unified platform kind of thing, and we've also talked about multiple stakeholders, be a custodian, be a fund accountant, be taxation lawyers, etc. One of them has to take a lead and create some kind of a ecosystem or a common platform. So what, according to the views of the panel, who would be in the best position to take that lead? Which kind of an entity would be in the best position to take lead and create this kind of a platform? Any views on that?
Okay. See, the lead has to be taken by the fund administrator. Okay. I will tell you why. Okay. As a IM, we are not expecting from a fund administrator to structure tax efficient AIF. No. What we are expecting from that is basically basic compliances, reportings happening from there, basic taxation related things like computation of the capital gains. If the person is a non-resident, what is the tax implication? If these are the smaller things also, if the fund administrator takes and integrates into this software. Because like one of the panelists mentioned, like Vikram mentioned, to advise on the tax, he needs to have the data to look at it. The data is with the fund administrator. Fund administrator sends it to,
This thing that when you say fund administrator, you would typically mean fund account, because as we discussed, the fund administrator concept is not really prevalent in India right now, right?
As of now, yes.
So in the current structure, when you are talking, you are referring to the fund accountant as the entity who can perhaps take this.
Okay. Current structure, the burden is on IM and the team. Okay. Currently, the fund administrator does maximum time the accounting of the entries, transaction recording. What we are looking at is that instead of that I am dealing with 10 different people, if the fund administrator has the capability to integrate these smaller services, okay? And for integration, the fund administrator will have to take the lead. And we all IAMs are there to support him on the knowledge, one, on the execution, two, we will support them on that.
Sure, thanks.
Thank you very much, guys. With a positive time, we'll have to end this discussion here. But the panelists are here. You can talk to them after the sessions.
Thank you so much, sir, for doing my job. All right, thank you so much. I can say we all, have some power gurus over here. So just take how much ever knowledge you want to, and the offline sessions as well. So now for the felicitation part, may I please call on stage Miss Madhulika Sangvi from K FinTech again. Everyone, a big round of applause for the ladies and gentlemen out there.
Thank you.
And time for a group picture, please. Thank you so much, Madhulika ma'am. Thank you so much to all the gentlemen for sharing this amazing world of knowledge.